Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, June 22nd. It's 6:14 as I'm starting the video. Quick check of futures. Nothing going on at all. Only notable thing is oil down 0.5%, but everything else is flat. Got a few macro items today. We've got the Red Book. We've got existing home sales, Richmond Fed Manufacturing Index, and we've got a 2-year bond auction this afternoon. And just in the rest of the week, I think we've got a five-year bond tomorrow, and then a 7-year bond on Thursday. And since rates seem to be dominating the conversation, maybe worthwhile to pay attention to those auctions as they go off. So let's get into it. I want to review the yields and the dollar and TLT and oil. I think they're going to be critical going forward. And so yesterday, just to recap, rates rose coming out of Powell, and then they reversed, and then we had the big sell-off on Thursday and Friday, and then yesterday yields ticked up 3.6 basis points. And looking at the corresponding response on TLT, we can see that yesterday we pointed out, hey man, this thing is either it's supposed to get rejected, but if it doesn't and breaks out, that's going to be monumental. And we did get the reversal right here. Pretty impulsive and dramatic. I mean, it didn't, just go down here a little bit. It was down $2.44, 1.67%. And that's a big move for TLT. So now the key is watching TLT operate in this range between 145.5 and 140. Does it simply bleed off that whole gain and come right back into 140? Does it oscillate here for a minute and just get in a trading range, or does it in fact reverse again and then break out? I think if you're trading, I think you got to have this in the crosshairs. On a daily basis, even if you're not a bond trader. I think it's so important because the market seems to be reacting almost tick for tick with these bond yields. And looking at the US dollar, we saw and noted this big 3-day ramp coming out of Powell Wednesday, Thursday, and Friday of last week. And then yesterday, we got a big reversal candle right at this layer of overhead resistance and bringing price back below the 200. Now, for you aspiring chartists out there, if you want to take down what I'm going to say here, it's a Google search. Google pipe, P-I-P-E, reversal candlestick. Pipe reversal candlestick, and you will get this formation here. A quickly rising chart pattern with an accompanying reversal stick right at the top. Now, one of the things I call this is a Pinocchio. The first bar comes up, and then the second bar calls the first bar a liar. That's just a little thing that I picked up along the way. So I call that a Pinocchio reversal. And if it plays out, the Pinocchio or pipe reversal setup calls for this to bleed back off. So we'll see if we get follow-up action in that regard on the US dollar. And this morning, on the blog site in the notes, I mentioned that the market and us, by extension, have been wrestling with, Is it growth or is it value and cyclicals? And what I've been kind of thinking is, what if it's both? If the dollar bleeds back off and just trades in a range, and TLT comes off and just trades in a range, in other words, everything just stabilizing. I think in that kind of a scenario, I think both growth and value will work. And I think the FATMAAN names and that kind of regime would do pretty well. We'll just have to see. But the cyclical names had the biggest bounce yesterday. Industrials, banks, materials, energy, all that reopening stuff were the ones that really shot higher yesterday. So as long as yields don't run away to the upside or collapse to the downside, and the dollar gets in a trading range, we may see a lot of different segments beginning to work. Oil was spectacular yesterday. It was up almost 2.6%. Biggest candle in a while. Bank of America was out with a note saying it's going to 100. We've been saying that for a while. Maybe not specifically, but there are a lot of structural things going on in oil that are supporting price. And if I don't know if you need to buy it at this high, but you get any kind of weakness, I think that's going to be a good trade for the long run. So let's dive into SPY and the rest of the indexes and the FATMAAN trade. So here we are from yesterday. We had a little gap up, and then it was just gone the rest of the day. A lot of opportunities to get long and participate in that move. Of course, as you're trading, you don't know the next 4 candles are going to be green. All you know is the trigger to get long with your stop. So your trigger on this chart was 417. So if we look at it on exploded view, if you took it here at 417.25, or if you took it here at 416.75, any of those would be fine. You had another level here at 417.75, then you were in the gap, and then it was gone. So, and the nice thing, like I said before, you didn't have any shakeout candles. It was a trend day. No scary prints to get you out of your position. So if you had been interested in trading SPY, you had multiple good opportunities to get long throughout the course of the morning. Let's look at Qs. A little more muted action, is only up 0.6%. And we had noted that on Thursday and Friday, they didn't sell off as much. So, we're back up near the highs. But yesterday, there was a great chance to get long. Why? Because on the first candle, you got a pretty deep look below 342. And we said yesterday morning that you could be long against 342. And as long as that held, you were fine. So, of course, once you drop below and then recapture, that's your buy signal. And then you got more or less $2 out of it, which is a nice trade. And here was that deep candle here, and then the recovery, and then the move up. And now we're wrestling with this little gap. I don't think that's going to be any kind of massive resistance. It may just toggle here for a little bit, then pop out. But I think, if we take out yesterday's high, that would be a place to get long for that gap fill and look for all-time highs up here at 346.50-ish. If we drop back down below 343.50, then it could be subject to some backsliding back towards 342. So depending on your time frame and how actively you're trading it, those would be your levels. A lot of big action in IWM yesterday. As I mentioned, IWM had the hardest sell-off on Thursday and Friday. Why? Because they're loaded with the banks and energy and cyclicals, industrials, all kind of reopening names. And those were the ones that were really targeted on Thursday and Friday, causing this sell-off. Now, yesterday we had a gap up, and I had offered the idea that between the 50 EMA and 225.50, I expressed reservations that price was going to have trouble getting through that, and that proved to be completely wrong. It just blew through that, what I thought would be a pretty stiff resistance zone, blew right through it, and then came up to the next level. So I think today, let's look at it here. You got this 227.50 can be your pivot for today. We came up, blasted through this resistance zone, entered the gap, filled the gap, and now we're just below. So we've got a gap resistance at 227.29, and then we've got a little layer here at 227.50. So if price can take either of these out, you can be long against that level, and then look for 228.50, and then up to downtrend resistance at roughly 229.50. So, but that proved to be a really nice trade, because if you had gotten long at the first level that was recaptured, that was 224.50, and you got to move to 227, that's what is that? That's $2.50. That would have been a really nice trade. Keep in mind we've got an open gap here below for in the future, but that was a really nice move. And again, very much unidirectional without any shakeout candles. So once you got long, all you had to do was sit there and got paid for it. So that was an easy day if you had the recognition to get long on the recapture of this 224. Let's move on to FATMAAN. Kind of a soggy day for Facebook. We had talked about this $8 trading range. I think my comments are exactly the same. Stay long against 330, but if 330 were to fail, I think that's going to be significant, and I would be getting out of my long if I saw 330 fail out of this trading range. That'll be kind of a bearish event. The first candle yesterday was, probably would have been pretty scary, but they bought it right back up. It didn't go down there for long, so safely within the range for now. Apple. Here was another one where if you were interested in Apple, it gave you a golden opportunity to get long. And where did that come? Right on the first candle. Came right down to this 129 that we had on the chart. Back tested this low. That was a place you could have gotten long. Very objective location with a stop just below. And then you say, okay, well, God, that happened so fast. I missed it. Okay, you missed it. What's the next opportunity? Like we always say, don't get down on yourself. Look for the next opportunity. And that came on the next bar where 130.50 was recaptured. So that would have been, a break below, then a recapture, get long, and then you got paid. You got almost $2 out of it. So today we're at the top of the gap. That's your pivot point. Any break above, 132 25, get long against that level and look for a push to higher ground. Let me just pull up the daily here to show you. My next technical target on the daily is 134.50 right here at this line. So if you get a push up here to that level, you might see, a hesitation. It had a lot of trouble back here at that level. So once you get that push, don't be surprised or frustrated if it doesn't just blast right through, in short order. So just be ready for that. And then above that, 136 will be your, 138 will be your target. And then above that, you're back into making a run at all-time highs. So Apple is still constructive. Tesla's been trying, but it's not going very far. We had a back touch of this channel yesterday. Tried to break out above 625 and ultimately failed. I think you still alarm 625 and you go with a long on a break above with a stop just below. Look for 640, then look for 655 as your upside targets. Microsoft had a nice day and also had a great opportunity for anybody that was looking to buy the dip. Why? You had this first candle of the day came right down to 258, which was a level that we already had on the chart. So it back tested this level. That was a chance to get long. And just like on Apple, say, okay, you missed that one. Now what do I do? Well, you get long on a recapture of 260, and then you got the breakout with a bull flag sitting on top of support. So I'm in this trade. I got, what did I get? I got July 2nd, 262.50, I believe is what I have. 2 weeks out, looking for this bull flag to execute and get a push up here to like 266, 268 like we talked about. So I would, if we dropped back into this range, I would probably exit my position. Why? Because of all the things that we always say. Once you break out of a trading range, you don't want to move back into it, because that would kind of make this look like a failed breakout with, bears starting to pile in and anybody who bought long up here possibly bailing out. So I want to see it hold this 262 and just power up from here. But Microsoft looks good. Amazon had a, junk day, all things considered, down about 1%. One thing I did here, just to show you, in gold, I dropped in the Fibonacci retracement levels from the start of the move to the high of the move. And you can see here where the fibs come in, right here at 3380, more or less 3340, and then 3300. So those could be potential pullback targets if this 3440 were to fail today. You could see a move back into one of these fib zones. And, and even if that happens, the chart stays bullish. Why? Because you're still in an uptrend. And even if you pull back, give 38% or 50% back, and then you get the bounce, all you've done is put in a higher high and then a higher low. So that keeps the chart bullish. And if you were looking for an opportunistic buy, those would be good locations to look for that. But short of that, today, active traders, 3440 is your pivot. Google had your opportunity to buy on the first candle at 2400. Then you got the unidirectional move up to 2435. I think that's your pivot for today. Anything north of 24.35. You can look for 24.50, and then blue sky country above that. Google remains a strong name. Big run off of 2200, and now doing a little consolidation here between 2450 and 2400. So you could also look at this as potentially a double bottom there at 2400, and if that were to pan out, you're looking at let's see, how big is that? 24 to, yeah, you're looking at 2500 as a measured move on that, should you get the breakout here of 2450. Come on. Netflix, more of the same. Just, nothing going on really. It moved $3 on a $500 stock. Tough to make money that way unless you're selling premium below. A lot of guys in the group do that. Knock yourself out. That's turned out to be easy money. Keep selling puts below all this trading, and you just let time decay just eat it alive and collect your premium. And you can do that week after week after week. So you can either, if you've got the cash, you can do that naked. But what I usually do when I do it is sell a spread below. That way you've got built-in downside protection because it's a spread. You don't have to, have the cash to back it up. Should you get assigned on a big surprise rug pull, I don't usually sell anything naked for that reason. All right, let's wrap it up with semiconductors. Really weak. I've been kind of surprised at this. I don't really know what's going on with the sector. But, as Jesse Livermore always says, what the dickens does it matter? Why, you don't have to have a reason to know what's going on. You don't need to have a reason to make money. I think it satisfies a curiosity that a lot of traders have. Why, this was so strong. How come it's so weak all of a sudden? What's going on? Who knows what's going on? All we know is we had a pretty sharp sell-off last week, and now we're putting in what could be a bear flag. That's bear flag type looking action. And so I think to get back on the right side of this chart, you've got to recapture 248.50. If you can do that, or if price can do that, I think you can take a long there with a stop just below and say, okay, we had a pullback. Now we're back on the upswing. But until that happens, I wouldn't be getting long. I would not be getting long SMH right at this level, because it's just too easy to reject at 248.50, and then you haven't really gained anything, and then you're on the wrong side of the trade all of a sudden. So this looks really suspicious to me. Given the Qs were up pretty nice yesterday. The whole market was up pretty nice today. This is a risk-on category, yet it didn't do anything. So I'm a little suspicious of that. So we'll have to see what happens today and in the days ahead. And as I mentioned yesterday, if you're some kind of long-term bull and had this from much lower levels, this 242.50 is your eject button. If you lose 242.50, something big is going on. That was a key level on the way up, and if that were to fail, I think you're going to have a substantial sell-off there, because by all means, that should be a level that really holds for semis. AMD and NVIDIA, The two semi names that were strong during last week's sell-off, well, they were the worst yesterday. I forget the percentage figures, but of the semiconductor group, they were like catching down to the rest after having had green days last week. They were leading the pack to the downside. I'll also pass this one other factoid along. Starting to see news and Twitter and stuff like that about NVIDIA. They have a decent part of their business in crypto mining. Their graphics cards or processing cards are used extensively in crypto mining. And if China is cracking down on crypto mining and all that stuff, what's going to happen to demand? What's going to happen to pricing for those crypto type processors at NVIDIA? And maybe it doesn't hit prices ASAP or hit inventories ASAP, but what does that mean going forward? Would they say something on their next earnings call that, hey, demand, hasn't been robust. It hurt us a little bit in this quarter, blah, 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 blah. So I'm just throwing that out there. If it is helpful to you, great. Otherwise, just watch the chart. But I mean, we talked about that a month ago in terms of get long into talk of this split. And if you got it anywhere along the way, you made a ton of money. I don't know what it's at right now, but you got almost a unidirectional move off of that announcement. So kudos to you if you took it. That was a great trade. So let's wrap it up here. I will be looking for some new setups. I just want to kind of solidify in my mind, what kind of setups are we looking for? What are the sectors that are going to work going forward? In a way you can do that, and it's what I'm going to be doing, is looking at the SPDR sectors, the spider sectors, looking to see, breakouts and breakdowns in terms of determining where's the tide rising, where's the tide falling. I'll also pass along, I saw a lot of option activity in XLV, the healthcare one, looking out into July. I believe it's the 125s and 126s, the calls in XLV. Saw some institutional, bulk sized order flow. So I've got XLV on the radar. If you go back and look at that chart, it hasn't technically broken out yet, but it's on the verge. There's a lot of those sectors that are on the verge of doing something. So I want to keep an eye on them, and I will certainly pass along the info as I get it to keep you loaded with good trade opportunities. So let's wrap it up there. If you're new to the channel, I hope you like the information. I think if you can get to the point of trusting my levels and focusing all your efforts on execution, I think you're going to do very, very well. And I think you'll see rapid improvement in your trading. I have a lot of confidence in my levels. Nothing's for sure, but I think they're pretty darn close. And like I said, if you focus on taking objective trades at those levels, I think you'll do really well. So I appreciate you stopping by. For the rest of you, longtime listeners, thank you very much for the support. Pass the link along. The channel's growing slowly but surely, and anything you can do to help me will certainly be appreciated. So this has been Chris Buss with Trader's Profit Compass. Have a good morning of trade, and I'll talk to you next time.